Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me for another show. Heaps going on in the stock markets and the commodity markets, big movements in gold. We'll get to that a bit later on. And then, of course, all the stock codes you'd like me to have a look at. Get them ready. We're going to go through those in the back half of the show. Now, as always, everything today, general commentary only, doesn't take your personal situation into account. Having been through all of that, let's get into this week's first chart. So starting off with the ASX 200. And while this while it looks like it's been fairly quiet on the surface, there's actually been quite a lot going on within the ASX 200. I'm going to show you what two key components have been doing and what this means for the ASX 200 in a few moments. And then over in the US, prices are on the cusp of a new all-time high, but investors remain persistently bearish. So is there something to worry about? I'm going to talk a bit more about that later on. But before we get to that, let's start with this latest price action in the ASX 200. I think the price action that we have here, I think it tells us a lot about the state of the market overall. Look at how the ASX 200 has been holding on to its gains over the last week. So we had this rally off the 50-day moving average a couple of weeks back, and since then it's been doing quite a good job at holding on to those gains. And the thing is, when a market has a strong rally and then a modest pullback or trade sideways, as has been the case here, it tells us something important, and that is that investors are buying the dip. And that's what we have here. I think the fact that prices are holding these recent gains, I think that's a bullish sign, where I think we're in an environment where the pullbacks continue to be bought, and that's been the case for some time. When you just look back over this chart, the dips have been being bought for a number of months now, and that's typically how a trend works. When prices are above rising moving averages, I've got the 50 and the 100-day moving averages here. When prices above those rising moving averages, the odds favour that these temporary pauses are followed by new highs until at some point the trend ends. But whilst that trend's in place, that's what the odds favour. Markets above rising moving averages, pauses tend to lead to new highs. The opposite applies when prices are below declining moving averages. So just coming back to a more bearish period during 2022, when prices are below declining moving averages, well, this is when rallies tend to be sold. Rallies back to the moving averages are sold, prices fall back to the averages, they tend to be sold. It all sounds obvious enough, doesn't it, when you say it like that? But many people really, they do make a mess of it all. So in an uptrend, what we find a lot of the time for many people, in an uptrend, they worry that every pullback is the top, and they start to think, oh, look, should I be getting out of all my stocks? And then when you go through the bearish phases, they think every bounce off the low could be the start of a new uptrend, and they buy too early and then get caught in the decline. So, I think we're going to try and spin around the way a lot of people look at these markets, and of course the trend doesn't guarantee that we're going to make money, but I think a basic understanding of trend analysis, like we just went through, I think it helps put the odds in our favour. And so what is this trend telling us now? Well, I think it's pointing to a bullish setting for stocks. The underlying structure is positive. We've got these rising moving averages. Of course, the 50 and the 100-day price is also above the moving averages. And as we've discussed previously, that well-established sequence of rising lows and rising highs. And these are, of course, all bullish markers. And I think they set up overall a bullish backdrop. And I think the odds favour playing to that backdrop, not betting against it. So in assessing the health of the ASX 200, or assessing the overall structure of it, I think it's worth having a look at two of the largest sectors. So those being the financials and the materials. And the materials is, of course, made up of a lot of the miners. So let's start with the financials. So after 2 months of consolidation, the financials are starting to rally off off the moving averages. So again, the 50 and the 100-day moving averages. The last couple of weeks, we've had that rally off the averages. It's not a decisive breakout at this stage. Prices are paused near their high from about a week and a half ago, but it looks like they've established a solid platform. You look at this period just over the last month and a half. It looks like they've got that solid platform established. And this type of structure often leads to higher levels. I think the probability favours a bullish outlook. For me, I'd really like to see a break above the high from Thursday a week ago. Let me just mark that here. That's sort of the level we want to see this above. I think if the financials can break above that high from a week and a half ago, I think it really does start to re-engage with the upward momentum, and this then starts to push higher, which of course flows through to the ASX 200. And then having a look at the materials. So this is the ASX 200 materials index. Well, they've had a strong rally off their 50-day moving average over the last month, and that's followed by a pullback this week. Given the extent of the previous rally, so this rally since mid-September, given the strength of that previous rally, the pullback we've seen this week, it shouldn't come as any great surprise. In fact, I think it's positive. I think it's positive that we're getting a pullback, and I think that helps consolidate a trend and it helps make it sustainable. The big development for the materials is that when we just compress this chart a bit, you can see this big three-year trading range that they've been in, and the big development is that its prices have been breaking out from that range over the last month. So I think that sets up a bullish environment for the materials sector. So we have both of those key sectors in bullish settings. In the near term with the materials, I think there's certainly scope for some more consolidation. It probably requires more than one down day to consolidate or correct the gains from a strong month. But I think the odds favour higher levels in the coming months for the materials. Coming back to the ASX 200, in the near term, I think we could certainly see this consolidation persist for a bit longer. Like maybe we could see prices just continue to trade sideways towards the moving averages. Maybe that coincides with the materials consolidating and the financials not quite ready to break to those new highs yet. But I think the sensitivity does remain to the upside. That's what the price action is suggesting with the series of rising lows and rising highs and all those things we've been through. And I think we should be positioning our portfolios accordingly. So let's move over to the US markets now. Before we do that, though, if you're getting some value from this, please hit that like button and leave us your comment. Tell me what you think. Are we going to be hitting new all-time highs in the near term, or is there like a longer corrective period approaching? It's always interesting to know what you think. But please click that like button whilst you're thinking of it. And now let's move over to the S&P 500. And the 3% sell-off from 2 weeks, so you can see this sharp down day here, that's that 3% sell-off from Friday 2 weeks ago. Well, it's quickly fading into the background. And it's interesting when we look back at a chart, because it's easy to spot a few volatile days. So you can see one back here in early September, then here's some volatility in early August, go back to the back end of May, and you can spot these periods of volatility. And at the time, I'm sure lots of people thought they were a big deal. But looking at them now, Well, you probably won't even remember what caused them. I know I certainly don't. They just fade into the background of the chart, as it appears this episode from 2 weeks is currently doing. And that's how uptrends work. They aren't accompanied by a smooth flow of good news. Of course, that would just make things too easy. If everything's great all the time, everything just went up. It doesn't work like that. Instead, they give us plenty of reasons for fear and doubt, and that's what leads to these sharp declines, which periodically appear on the chart. And but I think the important thing to note here is that despite the fear and doubt, the S&P 500 it remains in an uptrend, and every pullback has so far been bought, and prices are just below an all-time high. I spoke last week about the potential for a retest of the 50-day moving average. And maybe that was going to be part of a longer multi-week sideways consolidation. I talked about this possibility. We could get this sideways consolidation, but I'm not so sure about that. It looks like this rally could be close to resuming. I'll show you one of the reasons why I think that. So this is going to move over to a chart. This is an ETF. It's a Round Hill Magnificent 7 ETF. So it's got those big 7 stocks in there: Nvidia and Microsoft and Meta and Microsoft. And, you know the names. They're all in this ETF. So it's interesting having a look at this. So what we have here, this is a classic bullish setup. So what we have is prices plateaued for a couple of weeks, and we spoke about this a couple of weeks ago. Prices plateaued, had a sharp pullback, and then that sharp pullback has quickly been bought, and prices are now up just beneath the all-time high. In my experience, this type of structure typically leads to new highs. So I think that's going to be a bullish factor for the market should that materialize in this case. And then we have the equal weight, the S&P 500, when we look at it on an equal weighted basis. So S&P 500, but equal weight. And it's had, look at this rally it's had off its 100-day moving average over the last couple of weeks. Again, that's sign of the dips being bought. So we're in this environment where the dips have been continually bought. And we also have this 2 months. Look at this 2 months of sideways consolidation into the moving averages. I think that provides a platform for a new advance. And I think it's positive that the equal weight is currently trading up near its all-time high. That tells us that the rally isn't just about the Magnificent Seven. It's the broader market. The broader market is also participating. Hence, we're seeing the equal weight up near its all-time highs. I've got a couple of interesting slides I want to show you. So, firstly, I'm going to update on the survey that I showed you last week, and that is the. Let me just refresh that. This is the survey of the American Association of Individual Investors. And last week I was talking about, well, we went through all this last week, so I won't go through it all again in detail. But just to sum it up, the key point was that the average that the amount of bearishness that we're currently seeing, we're seeing above average bearishness and below average bullishness at an all-time high. So you just think about that. Stocks are at an all-time high and there are more bears than bulls. It's an unusual situation. Looking at what's happened this week, the latest survey, well, you can see there are a few less bears. It's gone from 46 to 42%, and the bulls have picked up a bit of support from 33% to 36%. But even still, I think it remains an unusually pessimistic survey against the backdrop of a bullish trend. And I think the fear and doubt that's showing up in the survey, I think that potentially lays the foundation for the next rally. I saw another piece of interesting analysis through the week. have a look at this. So this shows what this shows. Let me. This is from my X feed. I saw this a couple of days ago. Let me just enlarge that. So this is interesting. So you can pause this and have a closer look yourself. But in brief, they're looking at four distinct periods. They're looking at since 1950, the past 20 years, the past 10 years, and post-election years. So just to keep things simple, let's just focus on the since 1950. So since 1950, and it's the monthly performance of the S&P 500. You can see Jan, Feb, March, April, etc. The box is around November. We're just coming into November. And what's interesting with this is that it shows that the performance of the S&P 500 in November has on average been the strongest month of the year. November beats all the others on an average basis. Now, that doesn't mean it has to be the strongest this year. Nothing says the market can't fall. So this is the thing with these historic statistics. They don't tell you what's going to happen. They tell you what has happened. So, of course, the market could fall. It doesn't have to do what it's done in the past. But if we're considering odds, if we're considering probability, I think a bullish trend paired with a strong seasonality and a bunch of doubting investors, I think that puts a probability in favour of further upside. So coming back to the S&P 500, as it stands, this remains a bullish trend. The moving averages are rising, prices are above the moving averages. I think the play is to stay long while this remains the case. And as always, I'll be using those wide trailing stops to try and see off the many pullbacks which are inevitably going to occur along the way. So, okay, now let's jump over to the US small cap next. We've got the Aussie small caps. We've got gold. I've got a lot I want to talk to you about with gold. The other commodities, copper, gold, oil, uranium, and of course your stocks. We're going to go through those as well. But of course, that wraps up the free section. If you're not a strategy session, remember there's a link below. Click that, come in. Doesn't cost you very much, and we're going to go through a whole lot of, I think, very interesting and hopefully useful stuff. All right, so let's start by going over to the Russell 2000.